Good Fed day, everybody. How's everyone doing? Here's your order today. Sit on hands. Everyone put their hands under their butt. Hold on. Hey guys, hi Brock, Amit, here. Someone please take my mouse away from me until after the Fed. Okay. You want to trade into the Fed? It's your money. Put it in the safe. I'll trade tomorrow on Halloween. Boo. Okay. Anyway. All right. So yesterday, turnaround Tuesday suggestion. Oh, no, I'm not bad. Isn't what we do gamble? I know, we give it a gentlemanly name, speculation. Anyway, yesterday's turnaround Tuesday suggestion was crude. The entry wasn't so good at 95, had about a 40 pip drawdown before it turned and worked. So what do you think of that? That was a gamble. Trying the old breakout line. So I'm still constructive on it until I see a high. I'm convinced there's a high in S&Ps, and I still think there's a shot. You know, we stopped right here at 50%. I still think that we could shake out some bears and trade up here. Maybe even into the end of the week or next week. Of course, we take out yesterday's lows and we close back under this green line. That changes the picture. Okay. Hi, Monica. Okay, and oh, this is important. So, and Steve will be, I think Steve's back. So, and Blake brought it up the other day. It's Microsoft, which really never gave up the ghost on multiple corrections in the market. And Steve and I were talking about that this could be a 4. And if it is a 4, what you get is one more terminal thrust. Okay, I'm not saying this is it in Microsoft, but it's done what it had to do. And this was a leader. So if a leader is starting to get vulnerable, look at the weekly on it. Look at the weekly divergence. It's massive. It's glaring. Okay, I'm going to skip Blake and go right to Steve because I know he has plenty of things stored up. So what do you look at this? You know, if we get a disappointment here on the Fed, we could have a reversal week. Anyway, it's left a gap because of earnings, and it's diverging there on the weekly. Let's see the daily. Daily still glaring divergence. 4 hour, close to a confirmed high here. Shorter term stuff, it says we could make a new high. See this RSI reading? Markets rarely peak when price and momentum's confirming price, so we could get another rally there. And really, if you go the 15-minute, you'll see the same thing. You know, we have this reading, and it didn't give up that much, mainly sideways. So anyway, this is something to key on. When you think this is over, then this will be over. And actually, the NASDAQ has a little bit of a weaker, I was reading Jim, and he said the internals in the NASDAQ is showing more cracks than the S&P 500. So I think this will be the short. And here's the where. Looks like around 82.20, 82.30. So we're still 180 points away from tagging that wedge line. So we'll see if that could happen after the Fed into the NFP. I kind of have a vibe that Friday might be pretty important. And let's see, what else was I going to talk about? There's really not much to say in the currencies, but you are starting to get the Swiss rolling over again. This could have been the failing rally yesterday. Right in here. And we start taking out 99.07. I'm actually looking for new lows in the Swiss. If you just take this support level, that'd be 160. That would definitely take it under 97 to the 97 handle. And the weekly measures this line, the speed line comes in, I think right around Grega's target. Speaking of Grega, he's going to be here today. And Grega's just part of the best team on the net. I don't care if it's FX or other instruments. I don't know. I think that it'd be tough for you to find better traders all in one spot than here. Look at that. It's just loaded. Like the Houston Astros. Like the San Francisco 49ers this year. Like the Patriots forever with veterans like Tom Brady. Here's Tom Brady.
Coach, you remember the 49ers, Joe Montana, Jerry Rice, and those guys? That was a good team.
That was the golden years there too. But yeah, and you know, they've been crappy for years, and all of a sudden they have I think they're undefeated this year. Nice. So they put together a team. But yeah, I remember those days. Yeah, Joe Montana, Jerry Rice is best of all time. So we want to be good receivers today too. 30.48. Okay, so you think that's it? Ronnie at 30.48? Could be. You know, we'll see. You know, what we can do is we could see what the team is saying about S&Ps. And then I'll pass it to Blake. I'll just pull one out indiscriminately. I think Grega was looking for new highs. Let's see where the S&Ps are. Who hasn't subscribed to either a full subscription or light? Anyone going to subscribe today? So you're prepped and you have a Merry Christmas? Give me a Y if you're going to be a new subscriber today. No? Okay, there's one. All right, let's see. Well, Greg is going to be here today, so let's look at. Oh, yeah, the value line. Okay. Thank you, Dominic. You know, maybe, you know, it'd be nice to interview some of our attendees here in face. Are you interested in being interviewed here one day? Any of you guys that would like to, and I'm addressing the chat room too, the members chat. It would actually be good to have one of you guys volunteer. I keep Fridays open in case I have cancellations or I need to move somebody. So if you're interested, this Friday isn't open, but you know, just let the team know and we'll work you into the schedule. I think you'll find it a growing experience and you'll end up liking it because it's going to make you a better trader because you're accountable, okay? Because you're putting out your best stuff like we attempt to do every day. So let's take a look at the candlestick. All we have is monthly on this. Wow. Yeah. Okay. I think Andre's looking for higher numbers. Let's see. 4 hour, 5 days ago. Oh yeah, here's his default up here, 30.70. I know someone else I respect looking for 30.65. So I'm just thinking there could be another push, and I'm going to wait for that line, Dominic, in NASDAQ to be tested. So you guys, besides signing up with us, you could go to our sponsor and get a rebate. If you're in the US, we can't put you on the reimbursement program, but you'll get a check for doing your job every day. I mean, you pulled the trigger anyway, may as well get a piece back, be your own broker. Okay, so visit Forest Park and talk to Jason and Trent, and they're a broker of brokers. They're going to find you a place that's going to suit your needs. Okay. And let's see what Blake is thinking before the Fed today. I was watching the peso yesterday, Blake. It looks like it was trying to put in a low. I'm starting to follow it because of you, and wondering what you think going into the Fed here today.
Well, you know, I don't have a huge amount of thoughts on the peso right now. It's just that the thing is that it has to get above like 19. Oh, here, let me just go ahead and grab the chart. And good morning, by the way.
Good morning, buddy.
Hold on. Sorry, I had an upgrade for my my video card driver because you know, with the multiple monitors, and so it's like it changed up what I'm showing. So do you see my charts?
Yeah, got it.
All right, so you know, with the peso, we have this like little, you know, down descending channel, and really we have to get back above 1920 for me to turn bullish.
Yeah.
And
1940 would be very viable if that happened, don't you think?
Yeah, or you know, 1932, you know, somewhere around here, like this low would come into play.
Yeah.
But that would signal more of a, I guess, risk off type of move, you know, if that happened.
Yeah.
But we're holding below 1920, and I think while we're below 1920, the risk is still lower. But we've seen a little bit of a bounce in dollar Canadian and also dollar Mexican peso. Saw a little sell off in the stock market yesterday due to, you know, the idea that China and U.S. might not sign an agreement in Chile, where, you know, President Trump said we're going to sign something in Chile, and then they're like, well, you know, if everything's not agreed to, we might, you know, not.
They're not going to sign. They're not going to sign it on a piece of paper. They're going to put their signatures in a bowl of chili. I guess
that means means it's still like you know, they got some.
They'll get a lot of gas. They'll get a lot of gas.
Maybe farting a lot. Yes, that could be it. But you know, needless to say, the dollar mex is just kind of holding down here, and I'm not bullish. I'm not bearish at this moment, but I'm not bullish either, and so I'm just not really doing anything with it at the moment. You know, and it's one of those situations where, as I explained to you before, because of the cost of carry in the dollar Mexican peso, if you're going to play it on the long side, you got to time it pretty good. So you know, if you can't just sit there and hold it for weeks and weeks and weeks on end. You can try, but it's going to cost you a lot of money. And you know, like I can hold it for a couple of weeks, but if I don't make, you know, if I don't make 100 pips, or in this case for this pair, like 1,000 pips, but you know, if I don't get a decent,
it's expensive to finance this being long, just like it's expensive to finance the Swiss being short. Right.
Exactly. Sorry, I didn't mean to yawn on you.
Okay.
Yeah, but yes, that
they cost correct. About the same, Blake.
No, I think it's a little bit more actually for the peso.
Okay.
Believe it or not, I believe it is.
Okay.
But going back to what I was saying though, I think the dollar Mexican peso is definitely consolidating its losses. That's the one thing that you have to keep in mind. That you know, I'm on the 4-hour chart right now, and RSI is back to mid-range, so we could start a sell-off, a fresh sell-off from here, and relative strength, it would take a while to get oversold again, and that's the thing that you got to pay attention. Now we have ADP numbers coming out like here momentarily, so it's 30 seconds. So let's go over to a 15-minute chart of the US dollar Japanese yen. Let me grab Bloomberg, since I just had it right here, so that's why I'm pulling it up here. Watch ADP numbers, looking for 110,000. Let's see what we get today. 110,000 is what the market is expecting. Let's see if 125, so a decent number, not bad. You know, see if we get any revisions. The dollar's getting a little bit of a lift. The dollar yen's, coming up just a bit. See if we have any revisions yet. No revisions. Oh, 93. There we go. It's a little weaker than expected. Actually, that's that's a weaker revision from last month's number, so it's not good. Dollar yen's starting to tick down a little bit because of that. It hasn't affected anything else. So the GDP numbers, which will be out in about 15 minutes, will be probably the more significant number. That the market's going to be looking at. So just heads up for that. I thought Steve is going to be back today, but I haven't seen him yet. I haven't even heard from him this morning, so I don't know if he's actually going to be here today. He's supposed to be here today, but you might not get to talk to Steve today. How do you feel about that? Are you okay? You going to make it? Stelios was so excited that Steve is going to be back. I don't know. What's up, Stelios? How's it going?
Good morning. I'm very good. He's supposed to have returned last night, so he should be in. But anyway, we have Greg as well, so we're
we don't need him.
We don't need no stinking Steve. We don't need no stinky Steve. It's tough, man, when you're on vacation mode for a few days. It's tough getting your head back in the saddle. I get it. When I was in Napa a couple of weeks ago, getting my head back into the game is not easy. So let's talk a little bit about what's happening and Stelios, what we could talk about a little bit is the cable, because you'd make some comments in the chat room, and I guess you want to we could say stirring the pot a little bit. The pound is firm. We're not above 129 yet. We are, we've got a nice base developed here. How do you feel about the cable right now?
Well, you're right. I was writing about it in the chat room a bit earlier. First of all, we have a date. 12th of December is going to be the general elections, apparently. And we will still have to formalize it. There's a bill that's going to be debated today with amendments, blah, blah. They love voting, don't they, in UK Parliament?
They do.
It should be passed. And then the Queen formally agrees it to be becoming law. And basically we have an election on the 12th of December. Now, what does that mean? As we said yesterday, in my opinion, I don't see anything that makes me feel bearish about the sterling on the back of this. And simply because this election is another way of getting basically a second referendum. We were talking about this yesterday on the webinar. You have two parties, Labour and Liberal Democrats, who are who are basically want to remain in the EU, and you have the Conservatives and the Brexit Party who want to leave. And granted, the Labour Party is having troubles in the polls. Their percentages are quite low, and I personally think it's mostly due to Jeremy Corbyn, their leader, who is really not popular at all. And I've been talking to quite a few people who want the UK to remain in the EU, but are finding it very hard to vote for Corbyn. So, but all that aside, at the end of the day, you get another election, which with the party you pick to vote, you basically take a position on remaining or exiting the EU. So that's an opportunity that the British people didn't have up until, yesterday, when they announced that this election is happening. So for me at the moment, I don't see anything that makes me bearish sterling or cable due to this. In fact, a lot of people say, oh, there's more uncertainty coming. Yes, but I think the more this gets delayed, the more we're heading towards a potential deal or reversing Brexit or whatever is going to happen. I'm not saying it's right or wrong. I'm just saying what I think is going to happen. So I'm actually still quite positive in sterling. We saw the commitment of traders report, as our friend Nitish very kindly said this morning in the chat room. It's been reducing. The shorts in sterling have been reducing, but it's still quite short. So there's a long way to go before we get to neutral first,
Right. Yeah. You talk about like being, positioned negatively, and then you have to get to neutral, and then, you can go to extreme bullish sentiment at some point too. So, I mean, we have a long way to actually work the other direction in the event that the pound actually starts to move. Which, you know, that is something that you got to think about when you talk about positioning, and you know, it's going to be interesting. I think there are a lot of political risks for Boris Johnson at this point. I mean, you know, obviously, you know, he's taking a big risk by doing another election, another general election. You know, I know people like to say that the betting houses are never wrong, but they can be, and they have been. So there definitely are risks out there, you know, and polls seem a little less accurate nowadays than they had been in the past. So it's going to be an interesting. Let's, you know, hopefully we get some sort of resolution between now and Christmas, because it seems like we've been waiting on Brexit for years. Well, we have, right?
Yeah. I mean, I've been saying to myself, you know, there's going to be a time when I'm going to be bearish sterling for sure. But at the moment, for me, it's not this time yet. So we have to wait and see what happens.
All right. Well, you know, I guess one of the other things that we could take a look at before you know, before Grega gets here, you know, just take a quick look at the euro. The euro is consolidating. Now we've really formulated some pretty good support here at the 110.70 level. You know, we held out as decent support here, and we're making a little bit of a rally. The little double bottom that you see here actually projects to 111.40. We might actually see that ahead of the FOMC today because of GDP numbers. We have GDP numbers coming in 8 minutes, which will be pretty interesting to watch. The guys over in my office believe that GDP is going to start to weaken, and that's one thing that the Fed, you know, will probably be taking a look at, you know, going into today's FOMC. You know, everybody's expecting the Fed to keep rates unchanged, or excuse me, to cut rates, but then, you know, signal that that's it. And I think a lot of people are expecting more of a hawkish FOMC following the cut, so a hawkish cut, if you will. How do you feel about the FOMC going into today, Stelios? Do you have any comments or any opinions?
Yeah, I mean, first of all, the market's pricing a cut, not completely, but pretty much. And the Fed, we know, doesn't like to disappoint, so they're going to cut. But what happens with what they say? And if we believe Jerome Powell, who's been quite a hardliner in terms of he's not full-on dovish, hasn't been full-on dovish at all. Every time he speaks, he's always slightly on the hawkish side. You should expect him to do the same. And maybe, you know, maybe at some point he's going to hint that this is very close to the end of the cutting cycle. So I think there is this risk. But, you know, the way things have been going for the past few months, the market goes ahead and prices more cuts than the Fed is actually projecting, or they're letting us know, and then the Fed just follows what the market's doing. So I think chances are we're going to have a repeat of the previous meeting where they cut, and then the commentary isn't as dovish, so the dollar rallies a little bit, and then it starts falling again. So I mean, medium term, I'm still bearish a dollar, no doubt about that. But for today's action, I think that's probably what's going to happen. I have very little position. I mean, I only have a dollar Norway short, and I'm going to keep that throughout. So.
And speaking of the dollar Norway short, this was my chart of the day yesterday, and we could talk about, Dale. You always talk about the throw over, right?
Yeah, you mentioned it while it was happening yesterday.
Yeah, it was, you know, the risk of the throw over was there, and we got to 930. I was trying to short the US dollar Norwegian krona at 938. That's what I was hoping for. But we had this is called a long upper shadow doji. You can see it right there, or you can even call it a gravestone doji. If it was a red candle, it would have been a gravestone doji, but it's a long upper shadow doji, which they tend to be reversal candles. There's like I would say, if I had to throw a percentage, 60% chance that we reverse lower today. We're trying to work our way lower now, but the fact of the matter is that it really squeezed out a lot of traders that were short.
You know, something else about throwovers, Blake. Normally, you get an acceleration through that line, it usually stays above it for, you know, more than a day before it gets back in the channel. Just a, you know, gut feeling, the fact that it tried and couldn't even close above the channel yesterday might be indicative of its weakness.
Yeah, for sure. And that's why I think it's going to be really interesting to see how we close today, because if we close, you know, my opinion is if we close back below this 915 level, 916 level,
yeah,
right below here, we're gonna, you know, see 9 again. So
and look at that glaring divergence even on the throw over.
Big time. The RSI is like very, very divergent here. And so and you know, those are things that if you read the blog, I think this is one of those and I say read the blog because it was chart of the day yesterday, which is free for those of you that are not even light subscribers for ForexAnalytix. You know, it's worth, you know, reading that every day. We are having a little bit of an issue with Twitter our links and the hyperlinks that go into that. So you actually have to go visit forexanalytix.com, click on the blog right here. Click on the blog and you'll see the chart of the day there. The hyperlinks that we have, there's some little bug issue that we're trying to work through right now. But as you can see, here's the US dollar Norwegian krona from yesterday. Matter of fact, before Greg gets here, and I know he's going to be here in a few minutes, I'm going to be here to cover GDP numbers because I don't see Steve. And so we'll just help you. But really quick, if you have not tried out ForexAnalytix, make sure you do so. We have 2 versions for you. We have the premium version, okay, which you can buy obviously semi-annual and annual plans if you want. But we have the light version, which is only $19 a month. And it does not include the patterns in play. It doesn't include the advanced analysis. But, you know, this is a good way to have analysis and updates right to your mobile device. I mean, you know, I don't know any other analysis apps that you can get, let alone for our price of our premium, but at the light version price. But when you try it out, when you try out ForexAnalytix, you also get the premium version for the next 10 days. So, you know, make sure you try us out and download the app just so you have the full experience. We have GDP numbers coming out. You can see here's the data flash. That's going to be, you get that with ForexAnalytix. So with whatever version you have, let me put that back up. Actually, you know what? I'm going to put up the dollar yen. We have GDP numbers in 2 minutes, and then Greg is going to be here. You can see, I'll put Bloomberg next to you. Yo.
Sorry if I'm interrupting. One thing
problem.
that a lot of people talk about, and there's one of our friends who actually wrote it here on the chat as well. How can they be cutting the US with stocks at all-time highs? Which is it's a good question. We have to remember the mandate for the Fed is inflation and employment. Obviously, the stock market is something that will be a symptom of a good economy when they're handling rates properly, et cetera, et cetera. We've discussed this many times. Why are stocks up here? They're definitely not because the economy is flying. They're up there for many reasons, cheap money, buybacks, debt, and all that. So yes, it's a very good question. How can they be cutting rates when the stock market is at all-time highs? That would be a very valid question before the 2008 crisis, because things were moving a bit more logically before. Now things have changed. So they can be cutting, and they are cutting, and they have been cutting with the stocks at all-time highs, and they can definitely continue to do so. So,
and that's the thing. Yeah, the Fed. You could say, well, the Fed is doing it just to keep stock or asset prices higher, but really, what their mandate is full employment, and keeping, or like you said, keeping the economy humming and trying to get inflation at up above 2%. And the stock market is a byproduct. But a lot of people say that, well, they're just propping up the economy, but that's not necessarily supposed to be the case. Joe asked if I
it's
can
okay.
expand
It's
this
hard
a
to
little bit.
explain.
There you go.
You know why?
Yeah,
they don't know what they're doing. How can
That's
we explain
right.
it
right,
when they
up.
don't know it? It's an experiment for them too.
There we go.
Okay.
Okay.
Wow, it's a good number.
1.9.
See, they know what they're doing. We have a
1.9.
strong economy.
It's a good number. Good number.
GDP price index is lower than expected, but yeah, that's a good number.
Yeah, that's a good number.
compared to expectations.
Dollar has responded,
Yeah.
positively. Not a whole lot, but positively. You see the dollar yen popping up a little bit here. The euro dollar pulled back back below 111.10. Cable hasn't moved at all.
It's
I thought
really
this
not
would
much
move.
of a move, is it?
No,
Not
it's
much
really
of a move.
not. We haven't seen any revisions, but they tend not to revise the GDP numbers.
Peso
PCE.
knocked on the door at 1915 again on that.
So yeah, you can see here's the. Let me move this down a little bit.
You're gonna rue the day that I started following the Mexican peso.
here's the euro pulled back a little bit. We're touching the lows of the session right now, which isn't a lot. I mean, that this is very tight ranges. The cables pull back just a couple pips, but not really a whole lot. Aussies come off just a little. Really, the dollar yen's, making that stab higher. Yeah, and we're pushing up towards 109 again, but really very little reaction. I think the market's waiting more for the Fed. But this gives, for those of you that are keeping score, this is going to give the Fed the ability to be a little bit more hawkish, after they cut. So and I think that also fuels the possibility that if they are indeed not hawkish, if they are actually a little bit more dovish, you could see all this unwind in a big way too. So that's another thing that you got to think about. It's like everybody right now is like, okay, well then we're gonna get a hawkish cut. It's gonna happen, right? That's what everybody's thinking right now. But if we get a dovish a cut, and then the Fed starts to make us believe that there are more cuts coming, then we're going to see probably some pretty, severe dollar weakness, because people are positioning themselves right now ahead of the FOMC. That doesn't happen until 2:00 today. So we've got a long time. Oh, wait, the good news is we have BOC coming in before that, and maybe Grega has a little bit better idea of what he feels around the market here, but the dollar Canadian is knocking its head up against 131. So I think 131 is going to be pretty, it's going to be a big inflection point for the market. So I think Grega is here. Oh, he's not here yet. He's not here yet. Oh, well, maybe he is here. Hold on really quick. Do you see him?
No, he's not here yet.
No, I don't see him either. Okay. All right. Well, we'll see. Well, he's supposed to pop in a few minutes. And like I said, I'm not sure where Steve is. He was supposed to be driving back last night, and he did not come back. And I haven't seen him all morning, even on our internal messaging places. I haven't even seen him on Skype. So who knows? All right, so here comes the euro coming down a little bit. Let's take a look at the cable. The cable is still holding up exceptionally well, Stelios, I have to admit. The Aussie.
Steve, come home, Steve.
It's one of those cases where if you're short the cable and it's still up on the day, I'd be starting to get worried. Obviously, people are waiting for the Fed, like you said. So I don't think we should put too much weight on the price action now. But yeah, dollar should have been a little bit stronger, I think.
I miss Steve.
I know you miss Steve. I know you love talking with Steve. The Aussie and the Kiwi have come off a little bit. The Canadian's being held up ahead of the Bank of Canada. You can, it's popping up towards that 131. But the Bank of Canada, and this is one other thing that we should probably mention really quick. The Bank of Canada is expected to keep rates unchanged, and the FOMC is expected to cut rates. So, if we have a situation where, let's say, the Bank of Canada is, they keep rates unchanged, and it seems like they're going to be unchanged forever and ever and ever in a day. Which actually, we think that the Bank of Canada is going to keep rates unchanged, and they don't have any cuts until I think it's like late 2020 is like I think the first cuts priced in. I have to go double check that. But anyway, if the Bank of Canada seems pretty content in keeping rates unchanged, and then we get a dovish FOMC after the cut, you can see that dollar Canadian come down pretty aggressively. But that's, it's already, we're already priced in. The market already knows there is the market pretty much is already priced in. There is a cut coming in, and from the Fed, and then the BOC is going to keep rates unchanged. So we'll see what the Canadian does. I'm a little skeptical about the dollar Canadian while it's below 131, but if we pop above 131, that might be a game changer here by the end of the day. Dollar Mexican peso is getting a little bit of a lift. We're coming out of that channel, Coach. You got to watch that, but with stocks pushing higher, I wouldn't get too terribly excited about this.
I think it's bottom.
Yeah, it looks like it's bottoming. It's trying to. The dollar Swiss has had a nice little move up after that better GDP number. Let's see, the dollar yen is still holding up pretty well.
Oh, also, Stel, today's guest is especially for you. David Morgan's been an expert in the silver market for decades. You ever read any of his stuff?
I have, yes. No, looking forward to that. I'm definitely going to stick around to that.
Yeah.
Thank you.
Silver Guru 22 is his Twitter handle.
Yeah.
Ooh,
Great.
Well, that's going to be exciting for you, Stelios.
Yeah.
Yeah. Greg is coming, by the way. He just wrote on our Skype, so he should be here in a couple of minutes.
We are chocked full of good stuff today.
So, before Gregor comes in, and I want to bring up these yen pairs. If you look at the euro yen, this is still a bull flag. It's still a bullish pattern setting up. I'm not saying that it's ready to break yet, because it's not. We're just knocking our head up against this resistance, but we're still there. The pound yen, we're right there, right up against this. Oops, I didn't want to adjust that. I didn't mean to. Have to do that. Okay, but you can see we're right up against the top of the flag here in the pound yen. Aussie yen, we're knocking our head right up against resistance, this is a big resistance here at 74.82. And then we have the New Zealand yen. The New Zealand yen is just kind of consolidating, and then the Canadian yen actually gave us this was a bearish outside day yesterday, or a bearish engulfing, by the way, for the Canadian yen, and that's something worth noting, because this candle right here, because if we do get a down move in the Canadian dollar, where the dollar Canadian really starts to rally above 131, this could actually have a negative implication, because this would be a false breakout. Because the dollar Canadian, if you just go back 2 days ago, right here.
Hey, Blake.
We were breaking out, and then we got a reversal. Hey, Grega, how's it going?
Hey.
Hey, glad you could be here today.
Excuse me?
I said, glad you could be here today.
Yeah, it's nice to be here, but the markets are quite slow, and
they are very slow, but that doesn't mean that they're not going to pick up today, because we do have the Bank of Canada and we have the FOMC. So I'm interested to hear what you have to say as far as about the major currencies. Now, for those of you that do not know who Grega is, Grega is our Elliott Wave technician and our in-house analyst that posts all of his analysis, and I'm not going to go through it right now because I don't want to, because I don't want to take away from what Grega's got to say. But if you want to get more of Grega's analysis throughout the course of the week, he posts new charts every day on the Elliott Wave tabs on all the instruments that we cover. So you can get a fresh view every single day on what Grega has to say. So, Grega, with that being said, I want to turn it over to you so you can show us what you see in the majors here.
Yeah, sure.
And we can see your charts. We can see them.
Okay, perfect. So
awesome.
Actually, today I will start, because of the raise decision, I want to begin with the 10-year US notes. I have been tracking this wave C of decline for a while, and looks like that we are stepping into this fifth wave, final leg of this wave C. Now, when you're tracking an ABC correction, you would expect that wave C will take out this wave A extreme. This still didn't happen. So I think there is room for more downside here to test these September lows before we may see potential recovery, at least in 3 waves, maybe even something more significant if we consider that the higher degree charts are pointing to the upside. Now, with that being said, I think the dollar yen has room for more upside. I think that 109 could be broken, and ideally, based on potential catalyst, this could happen today. So maybe we will see just a temporary push to the downside on the 10-year US notes, and at the same time, maybe dollar yen will just looking to complete this fifth wave. Okay, you also mentioned this pound yen. I see pound yen and euro yen also in corrective phases within current cycles that is underway from the start of the month. So here I'm looking for potential rise higher into a wave 5 from a wave 4. This wave 4 could still go a little bit more complex, maybe even like a triangle. Now looking at the pound yen, where is it 4 hour here? Here we have also a triangle potential unfolding. So it looks like a slow pause after this very strong move to the upside. So this pause makes sense. And of course, I would be looking for another push to the upside. But the question is, what will happen when the 10-year US notes is really going to see this new low? If we take a look here on the higher degree time frame charts, on the daily chart, okay, you can see that this can actually still be in wave 4. In fact, if we respect that the market is still holding this lower trend line support, then trend is still up. And always when I see the uptrend still was supported by a trend line and I see only 3 waves from the highs, well, this should be potential signal for me that maybe this correction that we are seeing from the highs can come to an end. In fact, we have also this very interesting old swing high and now also swing low support right there at the 38.2% and also at this trend line, as I said. So everything around there will be key potential support level, okay, for a new bounce. And if that happens, then we know that pound yen, euro yen will just make a spikes into a fifth wave and the market will turn into a new corrective phase. With that being said, I want to look at the S&P 500 as well. Now the S&P 500, I know that they are bullish, but again, looking at this whole structure from start of October, I see market trading in a fifth wave. And we know that after a 5 wave movement, we can expect prices to slow down. Okay, we are also at these all-time highs, so I would not be surprised to see another reversal to the downside, another pullback. Also, as we talked,
what's your 1.618 level, Grega? And nice to hear you.
3050. And as you know, Dale, we discussed about this 123.6% extension, right? If you remember a few weeks back, and we said that always when market reaches a new high, for the last 2 weeks, the market stopped there. Okay, so we have this, if you just make a quick review of that, we have this 123.6 extension of this decline, and also we have 123.6 extension of this drop from that occurred from July highs, okay, down to August low. So both fips, as you can see, comes in right there around 3080, okay? So here we have the first resistance at 3050 for a fifth wave, but obviously there's an extension possible to even 3080. In fact, we have this current rise, I think, still very overlapping, and would not be surprised if the upside will be limited. Okay, so if I consider what the 10-year are doing, that could be coming to the downside in a wave C of wave 4, which means that yields obviously could come down, and this could also limit the upside for stocks as well. So I would not be surprised. But of course, maybe this will be just a temporary cycles. But when it comes to yen pairs, once we see this breakout to the upside, I think that After that, if we go back to, let's say, to pound yen, after that will be too late to look for any longs, I guess, okay, because we would be in a fifth wave. Same thing with the euro yen. Okay.
Nice.
Also, now when I mentioned this potential reversal on stocks from new all-time highs, okay, let not be so specific. Let's say from 3050 to 3100 level. Okay, if that happens, then watch out crude oil. Now, crude oil is, I see it in a triangle formation. You can see that correlation, okay, or let's say the swings are very similar, okay, but there was a higher swings on the S&P 500, but the crude oil were more flat, moving only to the right. Okay, so now you imagine if once more we see a new high and a reversal to the downside on the S&P 500, what will happen with the crude oil, which is already much, much weaker? So I would not be surprised if crude oil would actually come to the downside. So looking at the crude oil, what I see is a triangle forming in the middle of this decline that is still underway from 2018 high. So I'm looking for more weakness here, obviously expecting a free wave drop because I'm tracking a big ending diagonal here. And looking at the daily chart, it could be actually in a final leg of this contracting range. Okay, you can connect highs of wave A and wave C. You get this slightly falling trend line, and then this is a slightly upward trend line when I connect the swing lows. So this is a contracting shape, looks like a triangle to me, and it already has now 5 subwaves. Okay, A, B, C, D, and ideally we are now in a wave E. Now wave E can reach the 61.8%, not of wave D, but of a wave C, okay, which comes in around 59. Okay, so there's still maybe room for another push higher here on crude oil, especially if maybe the S&P 500 will try to lift the prices in line with the falling 10-year US notes.
Great intermarket analysis, Greg. You're putting the whole jigsaw puzzle together for everyone.
Yeah, and we are not done yet.
Okay.
So I think that crude oil could really see the limited upside in the next few days, and potentially we will see a reversal to the downside. But the key will be how the S&P 500 will actually respond from the highs. If I will see a strong decline, strong reversal from that fifth wave, and then I will know that at least 3 waves to the downside should be seen on the S&P 500, and that's when the opportunity on the short side could occur on crude oil, okay, because I would get a confirmation, as you said yourself, from an intermarket perspective. Looking at the 4-hour chart here, I'm actually tracking 2 wave counts. The first suggests that this is already a completed A, B, C recovery for wave E, and that we will begin starting to fall quite aggressively here. However, I'm still a little bit patient here because I have an alternate count here on the right, where you can see that this pullback, this drop, okay, was not so deep into this wave 1, okay? So maybe that's still kind of wave 4, and we see another retest of the highs, 57, maybe even extension to a little bit higher prices before market turns. But if we see a drop below this trend line support and maybe another move below 54.60 could already be enough for me to say that, hey, maybe crude oil is the first one that will top out and the S&P 500 will follow, which after all would not be surprised if we consider that crude oil, based on those daily charts, correlation that I showed you, is much weaker, right? So the question is also what will happen with Canadian dollar. Looking at dollar CAD, okay, here. Actually, here's the weekly chart. Looking at dollar CAD, we are in this big uptrend, but just now in a sideways or consolidation, big consolidation from 2016 highs. This consolidation from an old school perspective, just to hide this, could also be a head and shoulders. Okay, this could be left shoulder. Okay, then you have here a head, and then you will have here the right shoulder. and here will be your neckline, okay? So if we see a break to the upside here, then you know that upside potential is very huge, which makes sense if the crude oil comes down from a triangle. Now looking back and consider what the head that this head and shoulders pattern could be building here, and trying to put this in the same context of the Elliott wave principle, then we may also say that this was an ABC decline for a wave 4, this was a leading diagonal for a wave 1, and we are now in a wave 2. Now, in the middle of this wave 2, what is interesting is that we have a triangle formation, okay? We have a running triangle where wave B moved to a new extreme here, below wave A. But still, market moved sideways. So actually, it was the second leg in the middle of this free wave of a drop. And this second leg was just a little bit more complex. That's why I'm looking for a triangle. So if you think that this could be a wave 2, well, you will have issues because triangles never occur in a wave 2. So in my opinion, of course, there are some more aggressive bearish interpretations within impulses possible, but consider what the higher degree time frame charts are showing. I think that this triangle is the best wave count at this stage. So if the triangle is in a wave B, then we know that this final this leg out of a triangle is finally within this free wave of a drop. So I would be watching for potential supports here at the lower side of this corrective channel. There's also a 50% retracement, and maybe another important support level would be here. Then if we get a little bit lower, would be at 2780. There's also wave C that equals to wave A, measured from end of a wave B. And then you have this wave 4 support. Okay, you can see that there was some very nice and sharp rise from that support. So some very important orders, something has happened down there. And normally important swings are retested. So I would not be surprised maybe if we're just starting to drop even more from here, and crude oil really goes maybe towards 59, that maybe then this would be the second, I would say the second support that would be very interesting. The first support would be this trend line, okay? So looking at the 4-hour chart of dollar CAD, waves 1, 2, extended wave 3, we are now in a wave 4, expecting a drop for wave 5. Also notice that this, as I said already earlier, when I'm tracking wave C for free wave drop, I want to see wave C moving to a new extreme, to a new swing low. Okay, and you are still here above these July highs, lows. So I'm thinking that these lows will be taken out after this wave 4 bounce. And if that's really the case, then I have another reason why that alternate count on crude oil, like I showed you here, could really make sense. Okay. So that would probably be the best scenario, to see dollar CAD moving to a new low and then reversing higher. And at the same time, we see crude oil moving towards 58 and then reversing to the downside. Okay, so I hope this makes sense. And I know that there was a lot of charts right now, but this is how I try to approach my trading style, or I should say analysis, and then I put a trade out of that. Okay. So we can also take a look on what I have here.
How about silver? I have a silver guest coming on. You want to take a look at one of the precious metals?
Yeah, sure. I can take a look firstly on gold.
Okay.
Okay, so gold is actually, it's trading sideways. Firstly, I thought that maybe we bottomed here, but then when it started to recovering, we failed to break decisively above this upper trend line resistance. And actually back then, when this happened, I was not so optimistic on gold. Why? My reason again come from the 10-year US notes. I have seen the 10-year US notes in this wave C that was moving to the downside. So this market didn't confirm actually that bull run is for real. So actually, I'm not surprised that we are now just sticking sideways, but I think that gold and metals in general could be very interesting, again, for more upside when the 10-year US notes will bottom, okay, in that wave C.
Okay. I'm thinking about 2% on the 10-year yield. That would be near equality of the first rally, Grega. You showed the note chart. You have a count on the yields before we go, because I'm kind of tying that in with the U.S. dollar yen too.
I don't
I
have
know I'm
yields
having
here.
you jump around too much.
Let me just check if I have yields here.
Because if you're looking for higher highs in the yen, maybe gold isn't ready yet, and yields, I think there's one more shoe to drop, like you do, think.
Yeah, just a second.
It's okay. You could
No, I
just
think-
finish. Go ahead. Okay. Okay, there's your yield chart. All right, you
Yeah.
don't have the waves marked, but
Yes, oops.
oh,
Yes, you're looking for equality of this leg compared to this one, I
yeah,
guess.
right. Yeah. So equality would be about there.
Around 2%, yes.
Yeah.
that,
You know,
of course,
how would we know if we're going to get equality or fib extension? You never know until it completes, right? In the rearview mirror.
Yeah, of course. So what we have to see is obviously a market to confirm that equality really played an important role, and that would be only the case if we see an impulsive reaction away from there.
Okay.
So if we see a break to a new low and yields rising towards 2%, and then we see market reversing in impulsive fashion, then we know that we could be in a new at the start of a new cycle.
Okay.
Okay, so
Thank you, buddy.
in the meantime, I think that in the meantime, gold will just stay sideways, or maybe even move to the downside. Let me show this chart, or maybe even move. Here's the sideways price action. Let's say that we are in a triangle, but my concern is this drop. On a smaller time frame, it unfolded in 5 waves, so I would not trust this wave count at this stage, unless we see a break above 15, 17. Then that would be a different story. But
I
here
think
I
that was
have
Friday's high. Yeah.
Yes, and here I have this alternate count where there's a triangle in the wave B. You see a drop down for wave C, and then you rally. So gold, I think that I will pay a very close attention to it once the 10-year US notes will really show me an evidence that drop is completed. Also, you mentioned silver, right?
Yeah.
Silver also could be in some kind of a triangle, not that clear like on on gold. But still, you have the first leg unfolded in 3 waves, so it's a counter-trend movement. The only question is of what type this corrective wave 4 will be. Will be maybe a double zigzag to the downside, and that was wave X. Will be a triangle. Will be maybe something else. But the key is that probably this is a correction that will see more upside.
Okay, and a quick look at copper. Someone's asking, one of our attendees.
Copper, I don't have a copper here,
Okay,
but I
that's
will
all right.
make sure maybe to prepare charts till the next time. If that's
Thank
okay.
you. Thank you so much, Greg. I really like your narratives.
Thank you.
They help me. So if they help me, I know they help other people. And you didn't get that nickname Wizard of Waves for no reason. So thank you, Wizard. You could go behind the curtain again now.
Yeah, thank you.
You've seen the Wizard of Oz, right? With you and your kids? All right. All right, everyone. Grega Horvat, you could follow him here as a subscriber. He also has his own site and is one of the best eliticians that I know of. So thank you very much, Grega. And David, I see you in here. I'm going to give you a promotion. You know, traders don't get a lot of promotions. And then I'm going to, everyone who's interested in silver, stick around for David. And I'm going to unmute you, David. There you go. Should be able to hear you.
All right, Dale, thank you.
You're back.
Do you see my screen, or do I have to do something to show my screen?
Yeah, there's a green box, David, says share.
Got it.
And
okay, you cannot start screen share while other participant is sharing. Okay.
Oh, okay. Maybe because Greg is sharing.
Yeah.
Can someone take let me see if I could do it. There you go.
Okay. Okay. Share.
I know this is early for you, huh, David?
It is. It is. And how long do we go? 30 minutes?
It's I'm the captain here. Whatever you need to do, okay?
Okay, I've got to leave at 7. So
Yeah.
so
We won't go that
no,
long.
No. So
Silver
I'm
will be
saying-
80. Silver could be $80 by then. So we
So I said I'm showing screen 1, and I just hit
start. Here it comes.
You've seen a long chart.
We got it. Yeah, we have the copper chart there.
All right.
So David, welcome back. Perhaps I've kind of been around the markets for a long time, like you, and maybe you could just tell some of the people that are coming into it that weren't around for the Hunt silver squeeze a little bit about your background.
Okay, well, I'm long-winded at times. I'll try to keep it succinct, but I was 11 years old when Lyndon Johnson took silver out of the currency. So we went from 90% silver coins to what I call Johnson slugs. And none of the adults seemed to pay much attention to that, but I noted it. It seemed like, the two can't be equal in value. So fast forward years ahead, I became kind of obsessed about money and started studying on my own. And once I discovered how the banking system worked, then I realized that we could be in trouble in the future. But I didn't, again, obsess about it, didn't think a lot about it. My main career when I was in school was actually a pilot. I worked for a couple of large aircraft companies, one actually on the black side in the Skunk Works, but that's a side story. So I was fascinated by the markets. From the time I was 16, I was allowed to trade. I got the Uniform Gift of Miners Act. And so that's been my passion from basically the day I was born till now. Left the aircraft industry pretty early on and focused primarily on investing and trading. I'm a position trader. I'm not a day trader, not too much of a swing trader, but I've always had the adage, like the great late Richard Russell, that markets know more than anyone. And whether or not the price got there by manipulation or breaking news or whatever really doesn't matter that much in the aggregate, because the price is the price. And we can only agree on that. We can argue about why or how or any of that. It doesn't really matter. When there's more selling than buying, prices go down. And when you're selling silver or selling soybeans, the commodity never asks the question, why are you selling me? I mean, that's as simple as I can make it.
Yeah, it's people voting with their wallet, David.
Exactly. And that's what we get to see in the chart. So I also apply fundamentals, which I know there's pure technicians. I know there's pure fundamentalists. And I know there's arguments on both sides. I mean, there's the pure technicians will say that fundamentals are fundamentals. You're kidding yourself like you know more because you know the fundamentals of a given asset, a given commodity, or even a stock. And then, of course, the pure fundamentalists say, well, those are just a bunch of squiggly lines, and you don't know exactly until you look behind you. And there's some merit in that as well. So I know from 40 years of experience in being obsessed about markets and market movement and money in general, both are useful. So I approached two ways. So the reason I started with copper, when I caught the end of the previous presentation, someone in the audience that hopefully stuck around for me asked about copper. Copper is called Dr. Copper, and it's a good indicator. And I don't think now it's as good as oil, but still I think it's valid. And the reason it's Dr. Copper is it's a pretty accurate indicator of long-term economic health on a global basis. Well, what is that?
Back at the beginning of the year when we were trading over $3, I think Dr. Copper got hit with a malpractice suit for impersonating a bull market.
Well, you can see it on the chart here. That's a good one. You're right. I mean,
anyway, I don't know if they settled or not, but So what are you seeing here, David? I mean, it almost looks like we could come out of here to the upside.
It's possible, but my overall thesis is this:
bearish.
Until we break through the 330 level, which is the top of the chart, and a double top there. Yeah. Can you see my cursor when I move it?
Yeah.
Okay, so we got a top there and a double top there. And so double tops are more powerful to the downside than a single top. So we've got this, double top here, and then we fell, we rallied up. We did go above it. So that would, and I'm not a big Elliott guy, but it looks like, we might have made it. As you said, we got above $3 and false breakout is what I call it. The point I'm making is this. I think and believe and stress that the overall economic health of the world is contracting, not expanding. And the only way you could ever pay off this debt in the United States and all these other major countries, pick a European country of your choice, it doesn't matter. Take the Eurozone, any that are on the Euro, it doesn't matter. No one is producing enough real growth to be able to pay off what they owe, which means there's going to be a default of some type. You either default by saying, hey, I can't pay my bills, or you take 50 cents on the dollar and we can settle it out. Or in the government's case, in almost all cases where you're not on a gold standard, you just print and print and print until the money becomes worth less, and then it's finally worthless, which is what the South American countries experience all the time.
Yeah, Argentina again last week. Let me ask you this, David.
Sure.
You've been around the block a few times like me. Do you read into the selection of Christine Lagarde to head up the ECB as exactly what you were talking about? She has experience with restructuring debt through the IMF with countries that have had debt crises, and maybe that's another reason why she's going to be heading up the ECB.
Exactly. I concur completely. I think that we are going to have a reset, whether it's by design or the financial mother nature. It's going to happen. And I also believe it's going to happen probably within the next 5 years. I don't think you can push the paper paradigm much further than we already have.
Do you think we'll go to negative rates here to keep it going?
I do not.
Okay.
I think the dollar will be the bastion of last resort, and everyone's going to flood into the dollar, and gold will be going up concurrent with the dollar. And a lot of my ilk, a lot of my peers and compadres will be saying, what the hell's going on? Gold's going up like crazy, but so's the dollar. And
all they have to do is look at the last 6 months.
Yeah, exactly.
Right. I mean, it's been happening. So, what in fact, isn't that gold thriving in a potentially deflationary environment like it did in the 30s?
Exactly. And on top of that, it's a liquidity squeeze that John Exter was so eloquent about teaching us. That when you stop trusting the derivatives, you stop trusting corporate bonds are all junk, for the most part. You stop trusting even the T-bond. They're not going to pay me back real money in 30 years or 10 years, even a 10-year note. I don't want to risk my money for that. And when that happens and you run to the most liquid thing possible, and for 98.7% of the planet, that means currency in their hand. And when you're in Argentina, you want a U.S. dollar. You don't want the Bolivar. You want to have a dollar. And so there'll be a huge rush there. The problem is when that rush happens, there'll be a point in my studied view when you say, I don't want this either. This is losing value. It sure did better than the Bolivar, and I'm glad I moved into it, but now it's not really protecting me. I need to get some gold.
Okay.
I think that's what happened.
I'd like your reaction also, which is kind of a new event that's really never happened in this way. You talk about liquidity squeeze. What is your belief that's behind what's happening in the overnight market, the repo market, where banks have to pay up almost double for overnight funds when the narrative previously to this was U.S. banks are fine. We did the hard work and we cleaned up our balance sheets and our financial system compared to Europe. Why is there stress in the repo market and the overnight Fed funds market?
This is conjecture because I don't know for a fact.
Everyone, I know.
I'm just making sure.
Educated conjecture. I'm interested.
Well, I'm very well trusted, and people trust me. And they ask me some of these questions about subjects I know nothing about. But
well, I mean, how many people have a silver dollar named after them? Kennedy and you.
Yeah, exactly. Well, thank you.
So the Morgan silver dollar.
There we go.
That must have been a big day in your life, wasn't it, buddy?
Man.
Okay.
Yeah. So
what's going on there?
Really,
it's not the corporations are squeezed for tax payments and they're
No,
scrambling for
that's
funds.
that's a red herring, of course.
Okay.
No, there's some very large insolvencies in the banking system. And since these banks are inextricably connected to each other, it's a domino effect. And if you look at these domino games where one domino hits the next, and a long chain fall down. In the banking system, everything is so leveraged. It's really an exponential function. So it's one domino hits 2, hits 4, hits 8, hits 16. If one goes, it's not going to go 2 more go. It's going to go like they all go, more or less. I'm using that as a metaphor, but that's much more accurate. So there is some huge insolvency out there. And this is where we were in 2008 in a different way. What happened in 2008 is the banks didn't trust each other and the banking system actually seized up.
Yeah.
There was no real currency trading between banks because they just didn't trust each other. The Fed, good or bad, came in immediately. And if had they paused or thought it over or elected a committee to decide or any of that stuff, we probably would have had a much worse situation than what we had, because what took place was the Fed immediately came in and said, you know, those bad mortgages that are really pieces of crap, well, give us those and we'll give you these T-bills. And they did that to all the banks. And therefore, and everybody trusts the T-bill. That's, you know, the best out there. So they've replaced garbage with coveted, well-respected money, quote unquote, and kept the system going. This time what's happening is the banks don't trust each other. They're not sure even overnight if they're going to get their money back. This is huge. Most people don't understand it, which means they've got to go to the Fed, which they trust. So this is the walk of shame. Banks don't go to the Fed unless they have to, because it shows that they probably have a solvency problem and don't have enough money on. First of all, to be in a repo market and have to borrow means you don't have the reserve requirement that night. You have to have it by law. So that means you've got to go borrow overnight. Happens all the time. It's happened for years. There's a whole market called the repo market, and it's just the course of doing business. And there's lots of reasons, and not tax payments. Okay. But if a bank says, I need to borrow, and the bank A says, I need to borrow, bank B says, no, I'm not going to loan to you, not even overnight. Bank C says, no, D, E, F, G. Then they go, oh, we got to meet the reserve requirements, go to the Fed, which is allowed to go to the discount window and borrow overnight. That's a bank, but that's not what's happening. What's happening is it's lots of banks, and it's a lot of banks that won't loan to other banks. So there's a huge something going on. I mean, there could be a derivative fault in the background that we don't know about, that somebody out there in the big finance has defaulted. And so that means that bank is persona non grata. Well, as I just said, and I want to clarify, you could go and say Bank A it failed, and the banks are keeping it quiet, or it's not trusted. For what fails, maybe too strong word. So Bank A isn't trusted. So then what happens is these other banks look at, well, what is the biggest partner of Bank A? You know, if it's Bank of America, as an example, I'm not saying it is, then who's got the biggest book with them? Oh, it's Wells Fargo. Well, I'm not going to do with Wells Fargo because they've done, 60% of their stuff with Bank of America. And then you go to Wells Fargo. Well, who do they do the most with? Well, they do it most with, I don't know, the Bank of France or Santar Bank or whatever. And see, this is how it goes. So it's sort of like the social credit rating in China. If you're a no good Nick and you are ostracized and your credit score goes down, your social credit score goes down, you don't want to associate with that person because your social credit score will go down. So I hope I did a good explanation.
That was really, and I learned, okay, I didn't know it was law. So what a great explanation. So let's now get to, we've talked about things in the background. Let's get to silver, David.
Yeah, let's get there. So one more quick comment on copper.
Okay.
So what I'm saying, and have said for some time for everybody out there that looks toward the fundamentals, is copper is saying to me that the next move up in finance is going to be precious metals only. Now I'm lying because I think the ags are going to soar because there's a food shortage coming. But what I'm saying is there is not going to be another resurrection of the commodities boom that we saw in the early 2000s because of China. That's not happening. What's going to happen is you're going to get the real needs, which are going to be food, water,
Fuel.
Even shelter is going to come down. Housing prices are still overextended in a lot of areas. So copper's saying to me that,
Overextended. They're at new highs here on
Yeah,
the coast. They took
insane.
out the '08 highs.
It's crazy. I mean, I live in a very conservative area, and we don't get that kind of movement in the housing market here. So I'm I'm aware of it, but I didn't know that. So thanks for educating me.
Anyway, if we take out 250, you're talking about, and I remember copper. I've been around long enough. Copper trading under $1. So okay. And one other thing before I forget, we had a nice move from, I don't know, about 92, 93 in the gold silver ratio. Do you think that was the peak?
No.
And no,
I think
Okay.
I'm not a huge Elliott guy, but I believe in the overall theory of it.
Yeah.
And so there's a 5 wave. So there's 3 waves up and 2 correction waves.
Yeah.
So as far as I can tell, we've had our 2 waves up, and we're finishing the 4th wave, the correction wave, and we've broken out of that at 1350 gold that I'm showing here on this chart.
Yeah.
And we are ready to go up. And the 3rd wave up is usually
The money wave.
the big one. So whatever
Yeah.
the 2nd wave did, which I think is from here to here in gold. So you go from 700 to 1950. So I'm going to call it 700 to 1700. I'm going to excuse 1,000 because I do the math in my head really quickly.
Okay.
So the next wave is usually double or triple that wave. So instead of $1,000 move, you're going to get a $2,000 or a $3,000 move. This is a rule of thumb. I'm not
From
guaranteeing
1050.
from this point. So you're going to go from
okay.
1350 up 3,000 more, which is 4350.
That's how people get 4,500, $5,000.
Yeah.
Okay.
So had 11-year bull market. This 2008 crisis on this scale looks like a big correction, and it was. But you could see time-wise, it didn't last long. It was like, oh my God, things are going to hell. Oh, Fed comes in, rescues the mission, give you good paper for bad. Things go on. We come right back up, and then we make a new high.
Would closes back under 1350 change your view?
It would.
Okay.
It would.
Because it's always good when
this is a 6-year
right.
top. 6 years I had to wait for this.
Right.
And I trade more than gold, and I do equities and all that, and I'm not trying to make
to your credit, David, I remember I talked to you a couple years ago, and you said, nah, Dale, there's nothing to say for a few years. 2018, 2019, things will start to heat up again. And you were correct. We went into a dormancy period in precious metals, and you said, just in a couple years, things will start happening again. And that was, a great gut analysis that you knew there wasn't going to be much to talk about for a year or so. I remember our conversation.
Oh, yeah. No, it's true. I do get.
But then when you contacted me and you were ready to come on, and I have some time lag where I could book it, I go, oh, okay.
Yeah.
This is real. David wants to get out there, and he's putting out the word again. So
I appreciate it. Yeah, you've got a great audience, and everyone learns from each other. There's no such thing.
And a memory. How about that? I can't remember what I did yesterday, but I remember you saying nothing's going to happen in the metals for a few years. Yeah. Anyway.
Well, I've taken so many courses on how to trade, and I'm still learning things. But I have to tell a joke to everybody because I know it's almost all traders. But when I was in Silicon Valley, which was many years ago, in fact, I was born in San Francisco. That's just an aside. So I've been in the Bay Area a lot. I was connected with this trader that was a day trader, and we became fast friends. We met at an options conference, and we ended up having lunch together, came fairly close for a period of time. And he was British, and he was Cambridge school type, so I can't do a proper Cambridge accent, but he had this joke, and I have to tell it because I thought it was the funniest thing going. So I'll tell the story. So he says, David, do you know why we have so many indicators? The Welder Index, the Bollinger Bands, and it goes on and on and on. And I said, well, yeah, I know. We do it for getting an edge on the market, to get an edge on trading, to be better, to do better, to make more money. Oh, no. We do all those things so we can impress the girls at the bar.
Yeah. Well, now
Now-
you could get, huh?
Yeah, keep
right.
laughing because there's a point to this.
All
So I've been doing I did all that stuff. And I am down to the absolute basics of basics, and my trading is stellar. Is it perfect? No, no one's is, but mine is extremely good, and here's why. I threw out about 98.7% of that stuff.
Yeah.
I look at price and volume. So when you said, David, is this breakout? Now, your previous guest, I don't want to put words in his mouth because I didn't get to talk to him. As you said, would 1350 change your mind? The answer is yes, it would. Here's why I don't think that's going to happen. First of all, it took 6 years to break out. Secondly, look at the volume. This is the key. If you move on a weak volume, stand back and reappraise or don't enter. When in doubt, stay out. Oh, what did you say, David? When in doubt, stay out. Do I know every time I enter a trade that it's going to work out? No, I don't. But if I have any doubt, I'll stay out. I won't do it. And I have the Morgan 3-day rule, which means I have a certain point where I see whatever I'm trading, it has to break out above it or below it. If it breaks above it, I wait 3 days. Well, David, you missed $27 in the gold market. Yeah, but if I'm a position trader, I'm looking for that gold market to go up 3,000 then I'm not going to worry about losing $25, believe me. Same thing
that's
here.
one of the most difficult things to do for traders.
It is hard to do. Yep. Go ahead.
Reach. But what's even harder? People could say, oh, David, great forecast on silver, great call on it, great trade. But the toughest part is a great hold.
Yes. Well, let's go to silver. Do you have your audience ask questions or not?
Yeah, they want to see your silver chart.
Okay, let's do that.
Forex Gal wants to.
Okay.
And Monica said dollars don't want to live in Argentina.
Oh, U.S. dollars.
Yeah.
Okay, well, that's good to know. I certainly can learn more. There have been times in the past where they do, but okay, so here's silver. Pretty messy, as you can see. Silver did bottom in 2015. You can't see it this chart, but it really touched the bottom. Excuse me, there you can see it, right? So that's the bottom.
Right there. 13 and a half or so. Yeah.
And it almost hit that bottom again. Gold didn't do that. Gold kept making higher highs and higher highs. And so
that's why that gold silver ratio got up to 90.
Yeah.
I mean, I remember 40 being the mean for gold silver ratio.
Yeah, right. So, I'll talk this chart, of course. 2016, we went from that 1350-ish level all the way up to over 21. And I was pretty convinced fundamentally that was it. We were where we are now when we were, down in this level. I thought, kept going. The way I trade is, again, I let the market tell me. So I do following stops, stops. And sometimes I get whipsawed out, but not usually my stop is so wide, especially after I have a good profit that, if the market says you're wrong, David, I'm out. But this one I held all the way up and I got out at the top and we went into September, if I remember correctly. So I held that trade from January to September. We did a couple equities because most of my followers and readers, the people that pay me, mostly do equities. I don't want to in the futures market. They just don't have the mental discipline to do it. They don't have ice water in their veins like I earn.
Mining shares or ETFs?
Well, both.
Yeah,
I do both. I'm free market. If you would rather do ETFs, I'm pretty good at picking stocks. It's pretty easy to get in and out of. Most people understand them, but they're not as geared to the commodity as an ETF is. So there is some more risk if you take on a mining share. Okay. So I was wrong. The market came back down, as we all can see. So here we are again. I think this time it's for real, as I outlined on the gold market. But silver has got some ways to go, I think, to the downside. So let's expand this a little bit. Take this thing into like about a 1-year time frame and see what it looks like here. Okay, now we got a little bit better picture. We had this rally all the way up. But here's something of concern. Well, on the gold chart, we clearly saw we had big volume, but we don't have that on silver. So that's a caution right there. We had a bit of it here above normal back in September, but it didn't do much. That was some big buying. I mean, that was a pretty big day, but one day doesn't make a market.
It was actually a down day.
Yeah, so we got this and back down. So doesn't look good. If you look at my cursor, I'm looking at what I consider to be about the average. So above average, it started up, above average, kept going, a little above average, and it's still coming down, and a down day there. So there's not much congestion here at the 1680 level. I think your previous guy had it at 1677. It was exactly, and by the way, he makes some really great charts. Mine aren't that great.
Oh yeah,
but that doesn't make
excellent.
you a better. It could make you better. I don't want to. I just want.
Yeah,
I don't
many ways to skin a cat, buddy.
Exactly. So this is almost a gap here. And then we have some more congestion. So I actually think we could test this area briefly and follow this area. If we fall all the way back down in like the 15 level, it's high 15s, like some congestion here. I'm not going to give up on silver, not because I'm stubborn, because I believe what I outlined initially on the fundamental side.
Okay.
So we're already below the 200-day.
So there could be a buying opportunity at 16
Another
bucks.
one. We could have another buying opportunity at this level.
Okay, cool. So long term, what do you think? If silver is in a bull market, could we see it take out 50 bucks?
Yeah. Here's I'm making a new speech, Dale, and this is one of those that's been burbling up inside of me. I mean, you know me fairly well, but not, super well. So I have had these, I don't know if they're epiphanies, that may be too strong a word, but I've had these a few times in my career where something's kind of been eating at me and it's rolling around in my head. And one of the ones is Miss in the Silver Market. If you go to YouTube and type Miss in the Silver Market by David Morgan, or maybe just Miss in the Silver Market, that was one of those. That took me like 6 months, but I got it out and I spoke at one time. I didn't have to edit anything. It was just such an accumulation of what I wanted to get out. It just, once I opened my mouth, it almost said itself. I'm doing something similar. I'm speaking at the New Orleans Gold Show in a few days. And when we get to the ratio, this question has always kind of bothered me because it's one that comes up all the time. And in my view, no one's given a sufficient answer. So I keep thinking and thinking and thinking. So I finally think I've got an answer. You don't have to agree with me, but this is my answer. If you go back to ancient times, you go back into maybe I can even get it up since I've got control. I can put up another window, right? Or not. Well, anyway, I'll just speak it. So if you go back, you can see that in ancient Egypt, the gold-silver ratio is 5-to-1. 5 ounces of silver bought 1 ounce of gold. So you go back like 4,000 or 5,000 years, the ratio between gold and silver was roughly what I call the natural ratio of how it's dispersed in the Earth's surface.
Okay. And
that's for centuries and centuries, it was about 12-to-1. So my point is very simple. For thousands of years, 3000 BC, 2000 BC, 1000 BC, BC up to 2000, or not up to 2000, but up until 1873, the gold-silver ratio traded at the natural ratio because of one thing and one thing only. They both served the same exact function, which was money. Money. So to me, with over 4,000 years of history on my side, I would argue strongly that the most important function for silver is money. It's not going in your cell phone. It's not your flat screen TV. It's not your touch keyboard on your laptop. None of those things. They're all important and it's used for that. I'm not debating that. What I'm saying is the highest and best use for silver by the market, not by me, by the market, is money. Now, the further argument is that, and Mike Maloney and I are very close friends, but Mike and others in my ilk will tell you that, there's a currency disruption every 40 years. And from their criteria, they're correct. But that's not what I'm talking about. I'm talking about a currency disruption that takes place every few centuries. That's what I'm talking about. And I think that's what we're facing. We're facing a global paradigm where there's going to be a liquidity squeeze that moves down into the US dollar, and then there's a run to gold. And when the run to gold happens, there's going to be a run to silver, because when gold starts passing 2,500, 3,000, I don't know the exact number, but there's a tipping point out there that people that can only have 2,500 bucks in their bank account are not going to run down to their coin dealer or find a gold site on the internet and buy 1 ounce. They're going to buy silver. And there's a lot more people in that.
Poor man's gold.
They're going to go for the silver. So
Yeah.
when it resurrects itself as money, which only takes place to this degree every few centuries, but I am forecasting this, there'll be a run into silver like we've never seen. And when that happens, you'll see the ratio go back down to maybe even 10 to 1. You might see $5,000 gold and $500 silver. And I actually believe that's possible. Now, not those numbers, but the idea. You get a 16 to 1 ratio or a 10 to 1 ratio. If we get $3,000 gold, will that happen or not remains to be determined. I fully admit that. But think about supply and demand. What is the demand on money? I would argue that the demand on money is infinite. Certainly you see it in hyperinflation. Remember, during the Weimar Republic, there was one cry and one cry only, all the way up. And the cry was this: there's not enough money. Think about that. Hyperinflation, where you take wheelbarrows to get a loaf of bread, and when the wheelbarrow with the money is out there on the sidewalk, someone dumps the money out and takes the wheelbarrow because it's more valuable. And yet the cry was there's not enough money. No.
Yeah.
People get it backwards. So what we're going to see, in my views, my study view, is something similar. I don't think we'll ever get to that because the bond market is a natural deflator. I mean, once interest rates are forced up by the market and the Fed loses control, bond prices come down, which is a natural deflationary force that's large because there's so much debt out there that's held as safe, and it isn't. And so we're going to have some very, very interesting trying times. But I do believe I'm correct. When the run to gold starts, it won't be stopped. There's nothing that the banks can do about it this time. Oh, they can outlaw it, and they can tax it, and they can put up commercials on television and tell the brain.
You're unpatriotic to own it.
Yeah, but that won't stop it. Nothing will stop it. And there'll be some people, I'm not touching gold. So-and-so told me not to. Well, there'll be a few of those.
I don't want to stop you. What a great interview.
Yeah.
Really,
Well,
David, really a great interview. And you really, I learned from you today. I'm sure anyone who was here learned some things from you. And now I know where David Morgan's head is at. And I really appreciate you taking time to address our community. And David, for years, you're already my trading warrior brother.
Well, thank you. I really appreciate that. I'll just make one more quick comment for you.
Go ahead, buddy.
And that is, I will be at the New Orleans conference. I'm there only one day, which is the 4th of November. I am the last speaker on the last day. So if anybody in your community is in New Orleans or that area and they come to the New Orleans Gold Show, please come over and say hi. I'm not an arrogant, full of myself type.
You have 8x10 autographed glossy photos to
a ton of them.
hand out. Hey, David, why don't you take a minute and show your website?
Okay, I'll do that.
So people know how to follow you. You can follow. You're not that active on Twitter, are you?
A little bit. I have a fairly good Twitter following. So I do most on the equity side. This is unbelievable what this company is doing. I mean, there's only a few of us that even know about it. Once the news breaks and a large letter writer like Stansberry or Agora pick it up, then this stock will really fly. So there's an introduction to that.
You do other things besides the metals.
Yeah. Oh, yeah. And so here's a free letter. This is what I call the newsletter. So I call the Morgan Report, which is, the paid side of the website. The free side, you just put in a name and an address here, or email address, and you can get on our free list. And then if you're interested in subscribing, there is a pretty long sales letter. Come on, computer. Here, the video I got to redo, but you can watch it. But, I have different levels of membership, but I do the analysis, as you know. We've done rare earth, lithium, cobalt, uranium, all the metals, basically. I give a model portfolio, and I even have fund managers because I do a top tier, a mid tier, and speculations all. So like in my top tier, my fund managers only trade those because, they are, billion-dollar companies. You can't, if you're managing money, you can't put much into a spec stock that's a micro cap.
Right.
So you get to look over my shoulder when I make a trade, whether it's in the bond market, the futures market, with gold, silver, copper, whatever. You get to see it. I put out updates and alerts. I do by video. The research is par excellence. I've got a team here. It's not just me. There's 5 people that work with me. Usually, I'm not always the first. I am on that e-waste situation. And it can be trying because you know how good it could be, but no one else knows about it. It's not going to move very far. And then every paid member gets to ask me 2 questions a month. And I usually either answer them by email, or sometimes they're such great questions, I'll make a video and put them out to the community. Had some bonus reports like everybody else. And of course, like everybody, it's only 500 a year. Most of my peers are double or triple that. Most of you are spec only guys that are really good, like geologists that really know what they're talking about, are about 1,600 a year. And then you take Marin Katusa that worked for Doug Casey. He actually worked for me first. His is 7 times as much. His report's 3,500 a year.
Who's
and I
that?
know what he writes about. Marin Katusa,
Okay, I don't know.
pretty well known in the energy field. He's a
Okay.
good guy, but
Yeah.
it's the problem with the newsletter business is you pay 7 times as much, you're not going to get 7 times better information, believe me. Have a
Okay.
mastermind group. This is basically for your AIs. This are your accredited investors. I
Yeah.
do put out occasional financings, but not very many. Normally we get people like Dale or Mike Maloney or Eric Sprott or Rick Rule or whatever. And the advantage here is that you are on the call and you get to ask them your own questions directly. And I don't know anyone else that offers that. And then the insiders membership, I just have a couple here because basically I kind of help them coach their trading.
We're doing that right now.
Yeah.
So there is someone else.
Yeah.
Okay. Anyway, David, if I interrupted you too frequently today, I didn't take as much lithium as I normally do. and and I had a great time talking with you. You're the type of guy I would love to go out and have a beer and break bread with sometime if you're ever in San Diego. And thank you so much for kind of giving us a glimpse into what's ahead for us, David. Appreciate it.
My pleasure. Thank you.
All right, everyone. David Morgan. Go check out his website. Follow him on Twitter. This guy is a veteran and a dinosaur like me. You don't mind, do you, Dave?
Don't mind at all. Believe
All
me,
right,
I
so
just
anyway.
have some hair left.
Well, yeah, we'll get together, have that beer at the La Brea Tar Pits
Okay,
in
sounds good.
LA. All right, buddy.
All
Okay, that's a wrap, everyone. Good luck with the Fed today. What do you think the Fed's going to do, David?
Stand put. I don't think you're going to do anything.
They're not even going to cut rates today?
They might. I mean, that's what
Yeah.
everyone else is betting. I'm
All
saying
right.
they're not.
All right. And then the press conference, I usually put up Johnny Lang blues song, Lie to Me. So, David, it was great hanging out with you. Thanks, buddy.
Thanks for having me.
All right. Okay, everyone, remember, don't just count your pips, count your blessings. Good luck with the Fed. And we'll see everyone tomorrow. Adios. Good hunting.